bring in Jack Ablin, Chief Investment Officer for Cresset Wealth Advisors. Jack, is it over? Is the sharp selling, you're laughing, I know I'm on dangerous ground asking this question, but is it over?
No, I don't think it's over, Stuart. I think that I agree with a lot of the points you made earlier, that fundamentally things are sound. You know, in many respects, it's sort of like buying oceanfront property and just paying the wrong price. You know that the oceanfront property is great. You know the house will be there. You know it's a great place to be. But if you paid too much, you're going to have to adjust. So I do think the underpinnings of everything that you described is exactly right. One of the things I look at is the credit markets. You know, the willingness of lenders to extend credit has not missed a beat. There is no backlash. There's no retrenchment. I don't think lenders believe that their borrowers' ability to pay back their loans have changed one iota. And that's something that I track. And if I see that change, then I may change my opinion. But for right now, no. This is just, in my view, a technical correction.
Okay, interesting. I want you to give advice for our viewers. Now, our viewers they're not the big-time traders of this world. They're ordinary, regular, everyday people who've probably got some bucks in the stock market. What's your advice for them?
Well, yeah, I think your viewers are like me. They're big fans of yours, Stuart. And what I would say is
flattery will get you a long way, but not that far.
First of all, I would say, just statistically speaking, you know, if you want to, you know, put $1 into a stock portfolio and be relatively certain that dollar is going to be there, you're going to have to wait close to 10 years. Statistically speaking, you have a 96% chance of having that dollar in that portfolio 10 years later when you are willing to wait that long. So for me, my advice to your viewers are, first of all, if you're playing in stocks and you don't have a 10-year time horizon, you are taking a risk that you may end up having to sell at a loss.
Wow.
That said, I do think the market's still a little expensive relative to where bonds are, but here's the issue.
Well, hold on a second, Jack. Hold on, I'm sorry. I've got to interrupt you because we've got this volatility. Look at this. Now the Dow is up 122 points.
So it was up 300, down 200, up 100.
That's right. That's right. Up really 300, swinging. Down 200,
this is up 100.
Up 120.
Gut clenching ride.
That's a very difficult thing to play. I mean, don't panic. Jack, I want one more quick thing with you.
Sure.
One of the analysts at Wells Fargo says that if the Bitcoin bubble bursts, frankly, I think it's burst already, it could have big consequences for the broader stock market. You agree with that? Is there a linkage, Bitcoin stocks?
The only linkage that I see is really sentiment. I do think that Bitcoin's movement tends to mirror investor bullishness. You know, going into this downturn, investor bullishness was in the highest decile that I've seen in a long time. Bullish investors have high expectations, and high expectations are subject to disappointment. But I think that's the only linkage. It's really just investor attitudes. I wouldn't link a bubble bursting in Bitcoin would be a bubble bursting in the stock market. Absolutely not.
Jack Ablin, thank you very much for being with us this morning, sir. We do appreciate it. Thanks, Jack. Good stuff.
Thank you, Stuart.